Governor, I just want to follow up, actually, I think it was on Sam's question earlier on. You've conditioned all of us, you've conditioned the city to worry more about services inflation and average wage inflation, the twin bête noirs of the Bank of England. But you've changed your mind to cut on the basis of a very, very minor decline in both of those measures since your last decision. Are you telling the city, which CNBC and others represent here, that actually the city should turn down its algorithm's sensitivity to those twin measures? And secondly, former Bank of England economist, she was in the, I think, the structural economy department as well, Rachel Reeves, has just discovered a £20 billion plus black hole. Shock horror as well. Is the Bank of England as shocked as the former employee Rachel Reeves is about this huge black hole? And what are the ramifications of that?
Well, I think we leave fiscal policy to the government.
But it matters for the structural economy, doesn't it? If there's
yeah,
a $20 billion hole
I set out earlier, actually, I think it was Ed's question, how we think about that. I made the point that actually, we look primarily at private sector wages, and we think public sector wages play a role, but they're not the direct input into inflation measures. And I did say, you've got to, if you get the back of your envelope out, you've got to think about what the sort of the increment to public sector wages would be relative to what was expected, and then calibrate what you think the inflation impact of that will be. Well, now we'll know a lot more about that when we have the budget, but if you do a sort of rough back of the envelope calculation, it isn't that large actually. So that's the point. On services and wages, no, we're not sort of. This is not a sort of scrap this, look at this. It was putting it into a framework, which was my really point about Sam's question. It's a good question. Actually, as I said earlier, if you look at wages, actually the path of wages since May, since we were sitting here 3 months ago, has been pretty much exactly what we thought it would be. Services inflation has been a bit higher, but other goods has been lower. And as I did mention in my opening remarks, you can spend a lot of time in the entrails of services inflation. Of course, that's our job, really. We can tentatively, I think, but only very tentatively say, look, some of the more sort of, if you like, sort of stable and less volatile elements look as if they're more stable and declining than some of the other elements. But look, we will get a lot more information before we're next here and respond accordingly. So no, I'm not in any sense sort of changing the message there, other than, as I said earlier, I think Sam's question again, we've very deliberately sort of put in place a sort of framework to give you a good sense as to how we interpret it.